Very excited today to bring you the latest episode of the Salt Crypto Show, featuring the second appearance from the great Plan B. So Plan B, he's also at 100 trillion USD on Twitter, is a pseudonymous Dutch institutional investor with a legal and quantitative finance background. He created the Bitcoin stock-to-flow model, where he uses scarcity to quantify Bitcoin value. The stock-to-flow model is not only applicable to Bitcoin, but also to gold, silver, and other assets. Plan B is currently working as an investment manager in a team managing a multi-billion-dollar balance sheet. Why the name Plan B? So Plan B refers to an alternative plan for quantitative easing or money printing by central banks, negative interest rates, and currency debasement in general. 100 trillion USD, which is his Twitter handle, is a reference to Zimbabwe's $100 trillion US note during the 2008 period of hyperinflation. Hosting today's talk is Anthony Scaramucci, who's the founder and managing partner of Skybridge Capital, which is a global alternative investment firm. Anthony is also the chairman of SALT. And with that, I'll turn it over to Anthony for the interview.
Well, Plan B, thank you for coming back on SALT Talks. You know, it's interesting. I went back, our first interview, Bitcoin was in the mid 20s, $20,000 per coin. I don't remember the exact number, but it was like 25, 26,000. It rocketed to 69,000 and it came back down. But frankly, Bitcoin's at $40,450 as we're speaking right now. And for any Bitcoiner that has a historical reference point of Bitcoin being a couple $100, $5, there's been nothing but a meteoric rise to Bitcoin. Why do you think people, human nature, investment theology, why do you think people are so willing to attack Bitcoin because of its volatility and are not able to step back the way you are to see the true arc of Bitcoin's success?
Yeah, Anthony, thanks for having me again. And in that interview, that interview you mentioned, we probably joked about Bitcoin going up and then crashing back to 40,000 one day. And there we are today. And I think it's an excellent question about the volatility because, I mean, Bitcoin is so volatile, it gets attacked for that attribute. But with the volatility comes the return. And I guess experienced investors know that there cannot be return without volatility. But I've seen it personally with the stock-to-flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock-to-flow model and Plan B is the man, the myth, the legend. But when it's down and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019 when I published the article, we were really very much down. Then it's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing, and investors and people in general seem to forget that it's just volatility and the overall trend. If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. So yeah, I guess it's a question of perspective.
Okay, so it brings up a good point because I follow your stock-to-flow model. You explained it brilliantly the last time you were on. I'd love to have you recant it a little bit because we've added a tremendous amount of listeners since you last came on. Your stock-to-flow model, from a trading perspective, short-term, Bitcoin traded in the lower band of the model. You're being criticized for that. People are saying that the model is invalidated. But me doing this for 33 years, studying assets, securities, cash, dollars, foreign exchange, when I step back and look at your model, I think it is the most prescient because there's a expression that Warren Buffett has: I would rather be roughly right than precisely wrong. And the point being is when you step back and look at it, it's doing more or less what you said. So how do you respond to these critics? And describe for us once again your theory behind the stock to flow model.
Yeah, excellent point. And that Warren Buffett quote, I use it a lot. It goes back to the volatility argument. If an asset is very volatile, then the chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. So to try to predict or evaluate Bitcoin it must be a very rough estimation. And you're right, the stock to flow model is very rough. So stock to flow is basically saying that if an asset is scarcer, it should be more valuable. And how do you quantify scarcity? There is a known measure. That's the stock to flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock to flow ratio is 60. So the scarcer an asset, the higher the stock to flow ratio, the higher the value of that market should be. And it's a very principle-based, very intuitive thing that scarce things are more valuable. And this model very roughly, very simply as well, because it doesn't use any other input variables, any other factors to value the Bitcoin. It uses that same scarcity to value Bitcoin. So it's very rough. It's very not precise, and I guess it would not be very usable for trading. More than investing. So it's really a very rough compass, if you will, for investors.
What do you think Bitcoin has been unable to sustain its momentum over the past 6 months?
Yeah, there's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin. And currently, obviously, a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise, and the Fed has spoken about tapering, about cutting back on the quantitative easing. That helped any asset increase in value, if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course, influence the asset valuations negatively. But so that's clearly what's going on right now. And by the way, I think they're just talking the talk and not walking the walk. They normally try to push asset prices down, the central banks, by just mentioning rate hikes. And I don't know if they're really prepared to go all the way and crash the stock market, for example. In my experience, they won't run that risk, but it will be a very interesting couple of months, and that's, I guess, the main topic right now. And a lot of tech stocks are being hammered as we speak.